This is Tony Novak here to share a few points on how to stay out of tax trouble. Let's jump right in. Today's topic is assessing tax liability risk. And I just noticed that I did not update the title here. I'm going to do that right now. But the topic today is assessing tax liability risk. So a lot of people ask this question, and I'm going to give a couple of examples. Okay, there, I updated the topic. I have had, within the last week, I've had several people contact me with worried about their tax liability risk where they really didn't have any. In one case, the most extreme was a woman that was actually losing sleep about an issue that really didn't exist, and we'll just leave it at that. It appeared to me more of a personality disorder or mental health issue than it was a accounting issue, and I just tried to steer her in that direction, offering some assurance and say that this is probably not a accounting source or nothing that an accountant can really help with. Two other issues I have, matter of fact, I have the next phone call after this recording is I have to return to a nonprofit officer who's worried about liability for a failed organization. And yesterday I had one for a failed Delaware corporation where out-of-state investors formed a business. It failed. No surprise there. It happens all the time. Businesses don't always succeed. And they didn't close down properly after the business went bankrupt. But in both of those cases, these people are not even connected with the organizational paperwork that we could see, and really have not only no risk, but also no authority to even deal with the issue. In other situations, I find people are making false assumptions about their immunity from audit risk. For example, probably the most common one now is real estate investors who have a W-2 income and write off that W income based on real estate losses. That is a known red flag. And they say, well, I have my log. I'm an active real estate professional and I can prove it if audited. No, that's not going to fly. It's you have to look at the big picture, and the intention is to not offset full-time W-2 income based on your investment properties. That's one example. There are many others. Another common one is to own a corporation and work for that corporation and not be paid a salary by that corporation. That's a significant red flag. So one of the services that a professional like me, if we're doing a tax service, if I'm doing a tax return or another assessment, is to analyze all of the issues in your tax situation and summarize them into a list of the most vulnerable positions. And it's fairly easy for us to do that. And it's just good to be aware there is no taxpayer, certainly no business taxpayer, that is 100% safe, secure, immune, and 100% accurate in their filings. However, we're not going to nitpick. What we want to do is look at the big areas of potential tax noncompliance and liability exposure and address those on a go-forward basis. So thanks for showing up today. And if you like what you saw, please share this post so others can see it. And if you have a topic that you would like to see covered in a future episode, just message me through the app and join me here tomorrow for another Tax Minute.